as to how we're going to handle the next 3 days. It's going to be monitor, review, and then prepare for trading. We can look for some scalping opportunities if it presents itself. The one thing that we need to look out for, Chris, right, is how the broker's going to be able to handle the volatility. You know, if it becomes too volatile, if the spreads start widening, we absolutely want to go ahead and stay out of the market because we could get chopped up big time.
Yeah, and one thing I had a few traders in my trading room this morning say that they were receiving emails from their brokers about the likely, low volume environment or lack of liquidity or higher spreads, possibly even higher margins. If anybody has received an email, if anyone's received an email from their brokers this week about the UK elections, I would love an email. You can just forward that to me, cpulver@markettraders.com. You can literally do that right now, and I'll actually bring that up in the session. I want traders to be very aware of what brokers might have up their sleeve. There could be some difficult conditions that we're looking at trading. The one thing that Gary and I are expecting, so today, this is day one. So we are definitely going to discuss, really the kind of the high level view of what is expected by the markets. Essentially, it comes down to, are the conservatives going to stay in power and establish majority, or is the Labour Party going to either create a hung parliament or shake things up and kind of derail the Brexit process? That's at least where we stand right now from everything I've read. This does not mean that once this vote comes in tomorrow that it is all official. We still have the European Union and the UK having to sit down and talk about trade terms going into 2020. The European Union has established a deadline by January 2020 to at least have some type of trade talks. I'm sure that between the UK and the European Union, they're going to be flexible on deadlines. I mean, if they're like, nope, we got to do it. I mean, if you're going to put the future of the European Union and the future of UK in a 30-day window, I mean, Gary, we've been talking about Brexit for 3 years. So it's. I mean, I don't think there's going to be. I have a lot of high hopes and expectations for this vote, which is awesome, and I think we're going to have a lot of fun trading it because today is all about prepping and talking about strategies and how we can tackle this, because we will be looking at most of tomorrow's trading day. So let me go down to this. So I'm going to just put a new section here. So we expect, today is planning Thursday. So Thursday will be December 12th. This is going to be our day 2 from roughly 8 a.m. to 11 p.m. UK time, which is the same as 2 a.m. Eastern time to 5 p.m. Eastern time. Okay, Eastern Standard Time. This is when, quote, the polls are open. We still have exit polls after. So Thursday, all day. And I would also suspect that Friday, I'll just do this, all day. And Friday, I mean, bits and pieces, but I think Friday could also be an all-day mover. Because if we go into those exit polls, that will start to sprinkle in Friday's Asia session. And then, of course, we have a full active zone on Friday before the market ends and closes for the week. So I really think that most of the volatility this week is going to be on Thursday and Friday, which, I mean, I'm going to keep it really, really, really simple with some strategies today. We want to make sure that there's a way to approach it if you don't have a lot of time, or if you have, all the time in the world. Like, you can be as active as you want. You can be as passive as you want. You can also just sit back, brew some popcorn and enjoy the fireworks and be a spectator. Like, you don't have to trade this if you don't feel comfortable. If you want to trade this, trade small. If you want to trade this, be conservative. I think, the safer the better. I know for me this year, Gary, it's been a good year. It's been a profitable year. I certainly don't want to jeopardize any of the hard work that I put forth this year into something silly like trying to be aggressive and greedy on these Brexit, these elections.
Yeah, well, that's the thing. You guys, we have to realize that there's no, Rome was not built in one day, and let's not try and do that. Let's not try and change what's already been created. There's a process that we need to make sure that that's in play. And just to let everyone know, the time zone at the moment right now in the UK, it's 6 p.m. in the UK right now, which means that they are 5 hours ahead of Eastern Standard Time, right? 5 hours ahead of Eastern Standard Time. Someone's saying 6 hours. No, it's 5 hours. Correct me if I'm wrong.
Is this going to be? So should this be 3 a.m. then? Should it be 3 a.m. if it's, or maybe it's 7 a.m. the polls open?
Yeah, I was going to say that it is currently right now it's 5 hours ahead, so
Okay.
it's going to be 3 p.m. Yeah.
Well, let me hang on a second. So I found this article. Here's what you need to know. This was an article for this week. So polling will begin at 0700 GMT. So that's why,
10 o'clock, yes.
GMT
So
at Eastern Standard Time. That's 2 a.m. Yeah, so it's fine. You're right. It's 5 hours. So I got it wrong. It's actually 7 a.m. was when the polls open, which is 2 a.m. our time.
Yes.
Yeah. I just got the day started wrong. So it's 7 a.m. UK time, which will be 2 a.m. our time. So, but
Right.
same windows. It's about a 15-hour window for polls open to close. Then there's about a 4-hour window for exit polls. But like Sam mentioned, just trading the kind of the active zone on Thursday, and Thursday throughout the day should be very highly volatile on the pound crosses, and all day Friday as well. The good thing about today as well is kind of an added bonus is, who can tell me, traders, what's happening at 2 o'clock today? We're talking about all this Brexit stuff in the UK, but what's happening today at 2 o'clock? We have some US news too.
Come on, guys.
Yeah.
Come on.
Yeah, we got the Fed, we got FOMC, we've got this today, 2 o'clock. That's tomorrow. So here's today, 2 p.m. Eastern time, FOMC projection statement, funds rate, and a press conference at 2:30. I saw an interesting article just before I started the session. This is Bond Guru talking about what the Fed is probably going to do today, which is going to be a big fat nothing. But talking about what the Fed has put us through over the last 2 years. I mean, we went through a crazy year of rate hikes in 2018 and then a crazy year of rate cuts in 2019. And really, we've gone nowhere, which is true. You think about where the market has been. I mean, yes, the stock market has gone marginally higher, but the global economy has not necessarily created any more certainty. I think that, I don't know. I mean, I'm not going to say the Fed is to blame or any central banks, but it's been a wild ride. It's been an interesting last couple of years of trading because of how much emphasis has been put on the central banks. So this is coming up today. The rate's expected to stay the same at 1.75. That lower threshold is 1.50 to the upper threshold 1.75. I don't think the Fed is going to give us any surprises. I'm sure they don't want to rattle or shake the markets up by the end of the year. And I just think they want smooth sailing into the end of the year. So hopefully there's a December 15 deadline on U.S. and China talks, whether it's a delay in tariffs or there's some canceling of tariffs. If that happens, I'm sure we'll get some heavy risk appetite to end the year, which will be fantastic. It's just, this, Gary, is it just me, or is like the entire year felt like wait and see, wait and see, wait and see, wait and see? I've had a lot of positions I built up this year, but man, you are waiting a lot.
You know what? This is the whole reason why I started a new series called Gearing Trading, and the reason for that is because of that exact same thing. This year has exactly been that. When you're sticking on one strategy and you're holding on to one strategy, it's been that type of trading environment that we've traded, where you get into trades, you're sitting there, you're waiting, you're getting patient, you get out, and then suddenly the market goes in and breaks. And traders are getting a little frustrated, and I can understand why, because the market conditions have been so driven by news this year. If you take a look at the whole summer that we had Brexit, we had trade wars, we had what else was there, Chris? We had
we had the trade war talks. We've had all the central banks cutting rates.
Cutting rates. There we go.
Yeah.
But we've just had a lot of news coming out over the last few months. That's just really be giving us that sort of trading moves that you spoke about, where we have that push weight. It's almost like I've just come back from New York, and I was saying to my wife, when we were traveling all over New York, it was almost like rush weight. It's like you're rushing to get to a place, and then you're waiting in lines, and you're waiting for things to happen. It's like it's constantly happening throughout the whole process over here with trading. It's exactly the same thing. You rush to get into a trade, and then you wait. You rush to get into it, and you wait.
Yeah.
But it's, you know what? It's. I think it's still going to be setting us up for some good opportunities next year. And this is why sometimes when these type of things happen, we got to really start looking at and which we're going to do in the next 3 days. And I know we can do that, Chris. We're going to look at the overall direction of what the market's telling us to start preparing for. Because I believe when all of this starts filtering out and we start getting regular movements in the market again, we're going to be ready for those moves. And hey, who knows? Maybe it's going to be another kickstart like we had at the beginning of this year.
Yeah, I mean, I would. I mean, it's funny. I mean, I'm fully prepared for some sneaky little flash crash, like to end the year, kick off
Oh, yeah.
2020. This is an email that was sent to us by, I think Steve sent me this email. So this is pound margin changes coming in 2019. So due to anticipated potential volatility around the upcoming UK election, price movements may be significant after 3 p.m. Eastern time on the 11th, which is today, and 7 a.m. on the 12th. To help ensure you're more insulated for potential movements, we'll be lowering the maximum leverage available. So which means they say lowering leverage, which means you have more margin required to trade them. So these are higher margins, less leverage available, and I'm maybe higher spreads, but essentially
Yep.
it's going to make this temporarily more difficult if you're not paying attention to your trade size. So as a quick disclaimer about everything in trading, there's always risk, but certainly with these trades, if you're going to trade any pound crosses, please make sure that your trade size fits your risk parameters and make sure that we're being, very responsible on what we're trading, because brokers are going to shrink up that margin I'd say increase that margin, but they're going to make either a decrease in leverage or higher margin requirements, and spreads might be a little wild too. So you can see the window right there. It's essentially going into the dead zone today while polls are opening tomorrow. They're just kind of getting ready. They're getting ready to say, okay, let's see who wants to trade it.
Oh, yeah.
Yeah. So,
Yeah.
all right. I appreciate that email being shared.
There's hold on a second. Phil says he hasn't got the link sent to you. I'm going to share the link with you right now, Phil, so you can go ahead and get that sorted out. The link should be on your laptop, desktop, whatever it is that you're using, because the link should go through your email.
Yeah, I agree. And if you need to update your GoToWebinar app on your computer, that might be the case too. Sometimes you have to do an update on that. But Steve says, does this pertain to new trades? Actually, how would we answer that, Gary? See how Steven's question is asking, does it pertain to new trades? Well, yes, it's for new trades, but also if they increase the margin, I think that can they do that with all the current positions?
Oh yeah.
They can, right? They can actually, if it was, let's say you had $1,000 tied up in margin and they increase it by 20%, all of a sudden your margin is $1,200.
Oh yeah.
They can do that while your positions run. I mean, truthfully, a broker can do whatever they want. And we are the ones that are on the hook for it. So yes, if you are over leveraged, over margined, I've been warning traders now for the last 2 weeks. Try not to be positioned going into this election, because we knew this was going to happen. It'll be the same thing next year in the 2020 U.S. election. The dollar pairs will probably have same things, higher volatility. All this potential volatility is expected. So margins might change, things might change. So you have to be careful, but there's going to be movement. There's no denying there's going to be movement. So make sure you have the proper cushions and margins to trade it.
Yep, absolutely. Don't take anything for granted that, oh, no, they'll take care of us. No, you got to take care of yourself. Make sure that you're prepared for this, because if not, you're going to find out that you may get called on some of your trades, margin called on them, and you're like, but I had enough margin. So make sure you're prepared for that. Chris, we're seeing your chats coming up here.
Yep, here we go.
All right. Okay. So let's go ahead and get started. So the first thing, what are we going to go ahead and do, Chris? We're going to go ahead and take a look at some trade setups, then go to some details on the news, what we can anticipate out of the polls.
Yeah, I think let's start with the poll stuff first. I kind of said it earlier. I think it's a pretty simple way of thinking about it. I mean, you and I just talked, 10, 15 minutes ago before this, and
yeah,
Gary and I are on the same page that we think that if the conservative, so let's just say the UK election outcome, all right, UK election outcome. If we see that we have, so this is kind of, scenario one, if we have the Conservative Party wins. Is that correct? That's what we think?
Yep. If the Conservative Party wins, we can see some strength in the pound, and the reason for that is because everyone's going to believe that we're going to have a smooth Brexit with Prime Minister Johnson. So that definitely will go ahead and create some additional strength in the pound itself. If the Labour Party wins, absolutely, we're going to start seeing some movements to the downside, and that also confirms as well if we have a hung scenario 3. I think you're going to go ahead and put it out there too. Yeah.
Yep. So the hung parliament, we would say we would almost lean on the pound weakness. We'd lean on pound weakness, and I would say, the hung parliament's probably going to create the most uncertainty and the most volatility. I think that, and I say volatility like we want movement, but this would probably be the most indecision. We might have some really nasty spikes up. We might have, the market going bullish for a couple of hours, and I mean, it's as the polls are showing. If there is a kind of mathematical winner, where maybe before the polls officially close, then we'll see how this all plays out. I mean, I listen to NPR all the time, but over the last couple of weeks, anytime it's been talking about the UK and voters and what's the voter sentiment out there, to me it sounds like voters are just exhausted. This is now, I think this is 3 or 4 major votes within 3 years. And this is like, nationwide. This isn't just, parliament vote. This is like national vote. So it has to be exhausting. And all the politics that are surrounding this and all of the we've had 3 prime ministers through this Brexit. Like yeah. David Cameron was the first guy, then Theresa May, and now Boris Johnson. We're in the 3rd prime minister in 3 years.
Right.
I mean, it really is a sideshow. Not to say that the U.S. politics are any better at this point. But still, that is crazy what's going on. But nevertheless, the common denominator with all of this is we should see some movement. Now, given the fact that we saw the balancing in September and October and that big spike in October with pound strength, it was looking like the market was trying to kind of price in the Conservative Party. Right. I mean, this was what was discussed, and things were looking better. And there was also I think it was the Prime Minister of Scotland, all of a sudden endorsed like one of the agendas of Boris Johnson. I'm just trying to think what happened here for the fundamental support of October's rally. And I don't know. I mean, honestly, there's been so much Brexit stuff. It's like it's hard to keep track of everything. But this is what we're looking at as far as the election outcome. So go ahead, Gary.
I'm going to say, sorry, Chris, I'm going to jump in and say that if we have a hung parliament, I believe that's going to be a stronger bearish move for us on the pound pairs. And the reason why I'm saying that is because there's going to be so much uncertainty, right? Because it's like they can't come up with a decision, they can't make up their mind what they want. I'm going to say that this is going to be even more detrimental for the pound itself.
Yeah.
And they're probably going to have to go ahead and once again request another extension on Article 50, which means that there's going to be, again, a lot of pissed off, can I say that word? Okay, pedo people in that area. So, look, it's going to be interesting. But definitely what you've got written down there is certainly going to be the 3 scenarios we're going to sit down with. Obviously, the technicals are really going to be a good mix to bring in here, because when you look at the technicals, you see how the markets are set up technical, because we're mostly technical traders. Here we look at fundamentals,
sure,
and we use fundamentals to help us with the decisions we're making, but it's not really using the fundamentals to actually trade. We may be doing a little bit of that this week, just due to the fact that we are going to be paying attention to the news. But we're also going to look at the overall direction of the technicals to help us to make decisions as we head into Friday and next week's trading of how we're going to be able to handle the pound crosses. So definitely want to look at.
Yeah, and in fact, what I'd like to do here is I think it'd just be better if we just made a new slide. Give me 1 second here. I'm just going to make a new slide really quickly.
Sure.
So let's just make a new slide and throw in a little text box. So I just want to kind of summarize this with everyone so we can have, UK election scenarios, and we'll type that back up. So scenarios that we're looking for. So 1, we have Conservative Party wins equals pound strength. And as Gary mentioned, that's because we have, smoother Brexit process. We go to number 2. We would have the Labour Party wins pound strength, or I'm sorry, yeah, pound. No, it's going to be pound strength across the board. No, pound weakness. That would be, kind of it'd be a political shakeup. Political
Sure.
shakeup, no Brexit continuity. So that's a big deal. And then our other the other option, like we said, was kind of the hung parliament. Hung parliament, indecision equals pound weakness, and probably the most violent. I would say this is probably the most volatile scenario. This would be, a complete reset.
I would say that's like giving my wife the credit card in New York City. It can be wild.
Yeah, of any progress, and also, complete uncertainty moving forward. Complete uncertainty heading into 2020, and really not only 2020, but the European Union's January 2020 deadline.
Yep.
So again, it's going to be like back to the drawing board, and I'm sure there's going to be another referendum. We might have another big vote and a referendum in January if that's the case. So as Gary said, we're getting all this stuff out there to understand what is happening, why this might be happening. But the reality is, the Forex market, is a technical market. I don't care how you expect things to play out, because everybody can say, well, it's because of this. None of this matters. Honestly, as a trader, none of this really matters, because what we're going to talk about today for the opportunities and the strategies is we are looking for ways to capitalize on what this is going to be used for. If these scenarios are used as a reason or a catalyst for the market to move, we still need to know how to trade it. There is no guarantee that just because the Conservative Party wins, that is pound strength. That might be short-term pound strength, and then the pound goes back and falls back to October levels. We could have a lot of scenarios on how price actually plays out. But at the end of the day, I think Gary and I agree that price action and technicals are actually going to be the winner here. And so that's where we're going to kind of transition over into what strategies we're going to use.
I want you to, in the Conservative Party section there as well, just add in there as well, because once everything leans more towards conservative, Boris Johnson will be able to pass his deal by the 20th. I think the date is, they're looking at a voting date for the 20th of December, which means we can have some movement on the 20th of December as well. 20 December.
Yeah.
And then also we have to, once they leave the European Union, they are going to be entered into a transition period, which means it's there's a date going to be set or expire by the end of 2020 December for them to go ahead and get all that done. So there's a lot of pressure on getting the deal through.
Yeah, and I see a couple comments there. David's talking about Ireland's a major factor. I know, the border. Trade terms with European Union, Ireland, and the backstop and the border. That's a big deal. Again, we can get into the weeds here with all the fundamentals, but I think as kind of the high level overview, this is what is kind of enough to drive prices. If this is the election results, all these other things will kind of get sprinkled into it. I know that all this is a big deal. I know that whatever happens with tomorrow's vote is not a done deal. It doesn't mean that Brexit is done. It doesn't mean that Brexit is pushed through. There's still a lot of work to be done with the European Union and the UK, whether this goes through or not. So I think we can kind of take this scenario right here and understand that this is enough awareness to be trading accordingly, and know that there are scenarios that we should expect some pound strength or pound weakness, but again, be ready for anything. So let's do one more slide here, Gary, and let's talk about strategies. So I'm just going to copy and paste this one, and then we'll talk about strategies.
Perfect.
Okay. So let's go with Gary's strategy. So what do you plan on doing, Gary? What's going to be your overview?
Well, my game plan for this, I've already gone ahead and pulled out all of my pound crosses. Last night I closed out all my pound crosses that I was in, cleared up everything. I'm all cleared up and flat on all positions on pound crosses.
Mm-hmm.
I want to, and specifically not because I'm too concerned about the direction that we're going to move, but it's more like what type of volatility we're going to see and how the brokers are going to handle our orders.
Yeah.
That's my biggest deal, because they can kill your trading account.
For sure.
So I'm flat in all positions. Now, what I will be looking at is looking at the overall direction of where the market's going on the larger time frames, identifying support and resistance and overall trend. Then I'm going to go ahead and wait the next 2 days out and see by Friday what the trend, where the trend set off on. Look obviously at the results, so we know exactly what type of the results are being published, but then also then go ahead and match it up with the technicals and then deploy the trade in that direction. And I'm going to use a two type of swing, well actually one type of swing trading strategy. It's called the end zone trader. It's a swing trading strategy, and it's a trading strategy I can gear up, gear down on. And that's what I'm going to do. I'm going to gear up, gear down, which means that depending, of course, the details of what happens over the next 3 days, I'm either going to go with some short-term targets or some long-term targets. I may go and start off on one trading account with a long-term target, and then go ahead and deploy some short-term opportunities just for some bread and butter type of trades. So that's my approach over the next 3 days.
Okay, I like that. Is it going to be primarily focused around end zone? I mean, I know that your end zone strategy can be both short term and long term. So does that make sense? Like you're looking for some short term precision, but possibly targeting the longer term levels?
Yes, well, I'm looking at long-term targets and then looking to see if the opportunity is for me to be able to just keep buying on dips on the short term, and then taking opportunities out of the short term.
Okay, I like that. All right, good.
Because I don't think, Chris, and I think you agree, you know, we may get, let's say we get the Conservatives win, right? And we go into the vote that could potentially be the voting day that could potentially be the 20th of December, which means that this month maybe still quite choppy. We'll have the vote. We'll go into the into the December trading. I don't think we're going to get a lot of strong moves in one direction without anything coming back. I think we're going to get these moves and then moves and pullbacks until we really get things set out. Yeah. And keep in mind that also, and this is one thing that traders don't realize, that we got a lot of traders taking off over the December. So you got a lot of low liquidity due to the fact that we've got big bank institutional traders that are not trading through December 15th to December 31st. They're only coming back on the 15th of January. So over that period of time, we're also going to have thin trading, which means that if we do get some news, the breakouts could be more exaggerated than what it would be. That means if we get these strong breakouts, I think it creates opportunities like for pocket trades. You know, we have these big breakouts and then the pullbacks for those recoveries.
Yeah, definitely. And that's where a lot of it was, I was looking at October. I mean, the way that October created those big bullish movements, there's a ton of pockets available. And I think that if the market's ultimately looking to balance, I think October is going to be all the levels that were created, all those inefficiencies. I think, you know, this election could be a major reason why the market just goes back down and finds all those levels.
And this is not like any trading that we've traded before, right? This is like unique, different, because it's not only the general election that's taking place. We have obviously market conditions that we have to consider as well, trading over December too. So there's a lot of things that we haven't had over the December period that we're now getting, and we have to go ahead and mix it up with a whole bunch of other stuff as well. That's making this a little more different and a little bit more volatile.
Yeah. So I'll go in and just kind of talk about mine. I'm right there with you, Gary. I have no pound exposure. I haven't had any pound trades running since the blast off in October. And from there, and you know, and I'm mad at myself because once that move happened, I wanted to sell the pound Aussie at 1.90. That was worth a couple hundred pips. I wanted to sell the pound New Zealand at 204.50. That was worth 500 pips. But I just thought, you know what, man, better be safe than sorry. And I passed on a lot of trades. You know, we had some decent recoveries. I closed out, you know, pound Swiss profitable, pound dollar profitable, pound CAD profitable, and I think that was it. Those are the big ones that I was in. Pound CAD, yeah, it doesn't matter. Pound CAD, Swiss, and dollar. But I'm definitely looking at the same thing. You know, what has already happened? So, you know, where do we have, you know, major? I still think that, you know, major levels, you know, support and resistance to me suggest pound weakness. And that's just what, and so that's after all this settles. I mean, we might have a little bit more of a continuation, and maybe it's just a little bit more of a push on the pound pairs if the Conservative Party wins. But I think that the larger levels suggest pound weakness across the board. So maybe we don't get it right now. Maybe it's not immediate with tomorrow's election. Maybe it's not immediate through this month. But I do think that ultimately the pound will still balance. I think that the bigger technicals are suggesting a weaker pound. But if we have the weakness kick in right away, that's what I wanted to see. And and we'll just approach it like this is kind of approaching it one step at a time. Strategy wise, I will be using a couple of them. The momentum breakout strategy, or the momentum breakout course that uses a micro price detector. That's going to be for some short-term trading. Give me a second here. I'm not snoring into the microphone. Don't worry. That's my dog. Micro price detector, which is just going to follow price confirmation and volatility. That will probably be the simplest way for me to just get in and participate with any type of market volatility. I also want to keep this really simple and bring in an oldie but a goodie, but the London breakout strategy. Now I'm going to talk about this a little bit, a lot more specifically today, because I personally like a smaller approach. I like to use the 1 hour candle, or 1 hour candle as my range, but a 5-minute confirmation above or below. So it's going to be a combination of 1 hour, structure with 5-minute confirmation, and that is just trying to get in, eliminate risk, and run with whatever the pound gives us. If we have a breakout, right around tomorrow's London session, awesome. If it's really noisy and choppy around tomorrow's London session, it's all waiting around for the whole election to go through and the polls to close and all that crap. Fine, then I'll wait for Friday. So if I don't have a lot of time to trade this, then I'll probably gear this around London breakout on Friday. Any type of day-to-day volatility, I think that's where the micro price detector comes in. I think that'll be a fun one to deploy. And that's kind of it. I mean, we'll look at the structure here in a little bit. Gary, in fact, I was going to ask you if you want to take the screen. If you want to take the screen and run through some of your technicals, that'd be great. And then I'll just kind of chime in and we can kind of tag team that. And also, just keep in mind that the top of the hour at 2 o'clock, we can sprinkle in some dollar stuff as well. We'll see if anything wild and crazy has happened on the dollar. Man, that's perfect. That's exactly what I have in my chart. I love it. All right, so we can see your scene there, Gary, but I'm sure if, did you mute your microphone?
Yes, I did. Thank you for the one. I'm speaking to myself here.
All right.
Okay, so yeah, we may want to go ahead and jump in around about 10 minutes before the news.
Sure.
Although I'm not expecting a lot of movement out of the U.S. pairs, just because they're keeping the rates unchanged. If they do keep it unchanged, it may be a positive move on the dollar. But let's get 10 minutes into that. Just before the news comes out, let's go 10 minutes before that and just go ahead and review the dollar pairs. So quick one. There's a question that came up from. I think it was it Steve? No, I can't remember now. Let me see here. Good question. Oh, it was from Rob. He's talking about the target traders. What is target traders going to be doing with the pound? Well, the thing here is, and this is the thing with the target trading. If you're looking for new opportunities, you have to realize that. We could get an 800 to 1,000 pip move, right? Let me take worst case scenario and say even a 1,500 pip move on some of these pairs. And if that happens, you may be caught up in some positions, especially if let's say, for instance, we get a very good move on pound due to the Conservative Party taking over. And if that is the case, we could see price on the pound starting to rally high. We will see some strong moves to the upside. And the one thing we have to know as a target trader is target trading, number one, is a counter trading strategy. All right. Number two, it doesn't do very well with very aggressive moves. All right. So there is sort of risk involved using targets. Now, also keep in mind that you're going to be entering multiple positions or multiple levels with target trading there as well. And if they are increasing the margin on the orders on pound crosses, then that could create a problem for you as well, especially if you're adding so many more positions. It may put you at risk of running out of capital. So I definitely would say that if you're a target trader, stay out of the pound pairs as we're heading into the elections. Rather, let's go ahead and focus more on a trend trading strategy than a counter trend trading strategy. All right, you should really focus on target trading. Focus more on the consolidated pairs that are range-bound pairs than finding a trendy pair. So at the moment right now, let's stay on the sideline with regards to the pound crosses on virtually every strategy until we have directional bias and we know what we want to do, just as Chris is going to do and just as I'm going to do. All right, so jumping into a couple of pairs. Let's go ahead and take a look. I'm going to go 5 minutes. I'm going to have Chris take a look at it as well. So pound Aussie, and I've got the weekly time frame open up for here. And if you look at the channel that we have on the pound Aussie, we certainly have come up to resistance multiple times right here. There's resistance, resistance, and we've just come off resistance right here as well. Now, the market hitting support down here, we're now expecting price to move down. So pound Aussie is, in this case now, indicating that we should be seeing a downside move in pound Aussie. So let's go ahead and do a count, right? We don't know what the data is. We don't know what the end result's going to be on the vote. But looking at the technicals right now, and let's write this down. I want to write this down myself so that we're all on the same page. So pound Aussie is currently right now showing that we are seeking bearish movement, and we're looking for price to move down all the way back down to the channel, which is close to about 1,300 pips. So bearish move to the downside, 1,300 pips. Now listen here, I'm not discounting the fact that we can still blow out the top side and continue to move back up north. I'm just saying, let's look at the technicals and let's decide what the technicals are saying to us right now. We'll go ahead and connect the fundamentals with the technicals once we get the news out and we know what's going on. So this is a short-term channel that's taken place during this rally. All right, so we had this big long-term rally and the short-term rally inside there. That's on the pound Aussie. Let's go ahead and take a look at the pound Canadian.
Gary, just so you know, and all the traders out there, I am actually building another slide. So we'll have a couple slides for you to get screenshots of when we're done. I'm posting images and charts for you. We're going to kind of give you an overview of what currency pairs we're looking at from this higher time frame perspective. So I'm building this out as Gary's going through the charts.
Perfect. All right, so let's take a look over here. Now, you see I had an upward trend line right here? And with the upward trend line right here, we've traded back in again. And when that happens, traders, what I normally do is I go ahead and clear everything out, because then I identify that we do have a consolidation right here. And our consolidation is coming off the top right here. Down here is the bottom right here. So if you actually look at the pound Canadian is setting up inside consolidation with a gain. And by the way, traders, it's very, very important that you do this type of stuff on any currency pair you're looking to trade, just so that you know what the market's doing and what you can anticipate it to continue to do. So we can see that we have traded back and forth inside this range, and in this particular pair right here, we see a bit of room to the upside. All right, a bit of room. I'm going to go ahead and put some inside trend lines right here. Notice this. Notice how I connect those lows there, and it's acting as a bit of resistance there as well, right? So on this right now is indicating that we could possibly see a bearish move to the downside. Now, if we blow through that, there is some room to the upside right here before we get to the resistance. But pound Canadian is also finding resistance. So pound Aussie, we have resistance on pound Aussie, and now on pound Canadian, and I'm writing this down, we have resistance too. Now let's go ahead and open up pound JPY. And pound JPY, and I'm only just looking at the technicals. I'm not trying to do anything more than just looking at just a long-term range that we're in currently right now. I'm going to go ahead and pull this up here. We actually have a top there. All right, so we've got a long-term downward trend line taking place right here. This is not legit. This trend line right here is not legit right here because we haven't taken out the lows, but I'm putting the channel in over here just to see where our channel's at. And I'm going to go ahead and look at this right here. This is our current short-term channel right here. The price is now at the top. You see that again? Once again, resistance on pound, JPY. So pound CAD, pound Aussie, pound JPY, all showing right now that we're at resistance. Now listen here. We're at resistance, and in normal cases, we'll think about selling at resistance, right? That's the norm. But because this is a little different, because we're not in a normal market environment now with the news, we can understand that if price does, and the reason why I pulled up a weekly time frame, all right, is because traders, it may take us, all right, may take us till the end of the week to get all the data in to define the actual directional bias, which means that if you get, let's say the Labour Party comes in, or we have a hung parliament, and the votes are all leaning towards maybe a bearish pound based on the results, we could see a weak candle end up something like this. If we have a bearish candle, engulfing candle, maybe even a spike to the upside, and then an indecision candle right here. But if we have an indecision or bearish look on the chart by the close of this week, guess what next week's going to be? Next week's going to be a great opportunity for traders to go ahead and look to sell, going south. All right? I'm not saying that's going to happen. I'm just saying that could be the end result if this technical analysis actually holds right here. Let's jump into the next currency pair, pound Swiss. And this is what pound Swiss is. Take a look at that downward trend line right here. We took out the lows. This trend line is legit right here. And so we're seeing resistance, and I think we've got a bit of support coming off that same level there. Let me see if I go ahead and pull this down here. All right, there it is there. So
where's your current price on that? We're sitting at aren't we sitting in at one? Where's our price at? I thought we're above 130 right now. Where's pound Swiss?
Which one? On Swiss? Pound Swiss?
We're at, yeah, that's right, 129.90. Okay, I was just curious. I thought there's room to run up to 134, so.
134 on this. Well, we're right at resistance. If we can break through 134, we have to break through this resistance right here.
Yep. Okay.
So granted, yeah, if we break through there, then there's room for the market to move up to these targets in the upside right here. So there's absolutely, but if you take a look over here, in fact, if we break north and this channel holds, we could go up to 159.
Yeah.
I mean, over time, right?
Yeah, I mean, that honestly, that would be, how great of a reversal pattern would that be off of a, kind of triple bottom, historical lows? I mean, how nice would it be to have a big bear or a bullish crown pattern that forms a high at 134, pulls back to 128 or 127, and we can take that thing for eternity. Like, we can buy that thing at 128, 127, 126, and plan on getting to 150 or higher. That'd be an awesome trade.
Absolutely. I mean, that's the type of shape that we're looking for right here. I know this is a weekly time frame, but if we can get a nice little crown taking place right here, retest the backside right here, it's on right there.
I love that, man. And bring on the Swiss weakness, man. I'm literally, I've got Aussie Swiss, New Zealand Swiss, Euro Swiss, dollar Swiss. I'm ready for some Swiss franc weakness. And lots of it.
The fact that we're at resistance, Chris, makes it more exciting for us, because we're at a point right now that when the break takes place, we're on. It's either going long or short, depending on what's happening with the news.
Yeah.
Now, Stephen says here, what direction did the pounds go when the Brexit was announced 3 years ago?
That was they went dead south. Yeah, all bearish.
It was bearish, strong bearish down south. Yep. But it recovered. I mean, let's go ahead and take a look at 2016. Here it is right here. This was June. There it is. This is how pound dealt with that news in 2016, right here. And we probably recovered 60% of the move going up again, but it definitely sent itself. And you can see, just to get an indication right here from that day, let's take from the high of that candle. Let's take 1, 2, 3, 4, 5 weeks of trading, 6 weeks of trading bearish. We ran 2,000 pips down south.
Yep.
Now, the day of the news, which was this one right here, I believe this is the date.
The week of was like 1,700 pips or something like that.
May.
If you just go to the big wick, that's the wick. That whole wick, that wick is the week.
The week, correct? Yeah. Yes, that was the week. Yep.
So we're at 1,700 pips there.
Yep. I mean, look at that. That is nuts, man, right here. I mean, that's just from the top and bottom of the week, 1,700 pips. Yep, close to 1,700 pips. You're right. Crazy. So this is what I'm saying. You know, sometimes it's going to be okay. You know, don't be looking at like, oh my gosh, this is 1,700 pips, 1,800 pips. I could have caught this whole move and I could have made so much money on this trade. Let's look at the downside first, right? Because a lot of traders look at the upside and they look at what they can make instead of what they could have lost. And so we have to look at the risk, because we don't want to risk, 50% of our trading account to make some, 1,000 pips. It's just not worth the risk on that on your account. So let's look at the downside too. So pound Swiss definitely at resistance right here. Now let's go to the pound New Zealand dollar. And keep it in mind, just as Chris mentioned, we're not just trading against one currency. This is not just the pound on its own. This is trading against other pairs too that is being influenced by their own data. So there's multiple currency pairs that are being traded. Let's take a look over here. All right, so here is the pound New Zealand dollar. We got support here at the bottom, and we've got resistance here. Look at this trend line going up right here, how the market bounced off that as well. We've just come off that. There's room to the downside. If we look at this as more consolidation, then it'll look like something like this again. Taking off the tops right here, and I'm going to connect it down here to the bottoms. So we're again at resistance. Let's see. We have to, discuss every avenue right here. And the one thing that just come up more often than not during the pairs that I've looked at is that we're at resistance right now, and we're getting indecision candles on the pound crosses right now. Let's go take a look at pound. The last one right here, pound US dollar. We can go ahead and take a look at. I'll let Chris go ahead and talk about some US crosses due to the fact that we've got 10 minutes to go before the news comes out. I guess this is the only one right here, Chris, that I'm not seeing any resistance at. Maybe a little bit over here at the top. But other than that, we've got support coming off here. And let's see here. That's it.
Yeah, I'm going to put here, the bulls appear to be, breaking out. I would say that the point resistance, meaning like the bull score a point resistance at 1.3300 to 3350. If you look left of those highs back in December of last year, Gary, like yep. December, January, those are roughly 1.34, 1.3350. Those are yep. the highs that I would say if we're going to see a run to the upside and we score a point, that would be the point. And then we're probably going to pull back towards 128, 127. But to me, this also factors into the bigger picture on the US dollar. I think the US dollar has a big move ahead of it, and the pound could be a big beneficiary of that. I think the euro dollar has a lot of room to recover. The pound dollar coming off lows at 1.20 has a lot of room to recover. So this could be a two-part trade where this is, short-term excitement for the pound right now, but long-term, dollar index trading over the next 3 to 6 months.
Absolutely. Do you want to jump into the pound crosses, the US crosses as we're going into the news coming up in the next 5 minutes?
Yeah. Can you compress that chart and let me get a nice little screenshot of that one? Yep.
Sure.
That's perfect. Yeah, that's fine. That's fine. Let me get a screenshot of that, and then we can. You can keep the screen if you want. Honestly, yeah. with the FOMC expected to not change rates, I'm not going to run any robots. I'm not going to trade the script. I'm not going to do micro price detector. I think we should just continue to hammer out. Let's watch and see what happens on the dollar. I'm really looking to see what the daily candle closes today. I'm looking to see what the weekly candle closes on Friday. But I think everything is taking a backseat to the pound crosses this week. At least that's my thought.
Yep.
So I'm just getting that picture trimmed up and good. Okay. All right. I've got all the screenshots ready. So if you want, can you take a look at the dollar index really quick, Gary?
Absolutely.
Okay.
Now, before I jump in there, notice I put in this line, this horizontal line right here. I like to connect the bodies because sometimes the bodies actually tell you a big story right here. And the story that it's telling you is that price struggled to break through this level, because you can see how the wicks go like like you saw this candle that was above the line.
Mm-hmm.
It closed up above again,
Yeah.
creating a lot of resistance and support, creating a pivotal point right here
Yeah.
for the market.
Yep.
And so now that we get price coming back up to this level, instead of me looking at this level right here, I'm thinking this level is again critical resistance right here. So if we get a downside move down here, we could be potentially going to the backside of this downward trend line to retest that and maybe even further down south. So
yeah, and you know, if it's a head and shoulders pattern, then we're going to get that right shoulder setting up around 126. If it pulls back to 120, that's really a strong psychological level. That's triple bottoms and historical lows. But I'm still looking at this as, if you scroll out of this, Gary, if you compress this and show a lot of history, I think that just there's a great level to be buying. You know, I mean, so if we have a double bottom combined with a massive crown pattern, I think the dollar is a big story here. That so just don't lose perspective on what could happen over the next 3 to 6 months if the dollar makes a big move. As long as we're holding support at 120, this thing's got a lot of upside potential.
Sure.
Yeah. One pair that we didn't go through is the euro pound, and I know that's not everybody's favorite trade just because it's a lower volatility one, but it's still a valid pound cross if you have that one up.
It is, and I'm going to go ahead and say that when we come back, and we've got 5 minutes left. I just want to go to the dollar crosses.
Yep.
So I will go to the euro pound because I know we're at strong support on the euro pound, and we'll go ahead and take a look at that. This is what I drew up on the 1 hour. I actually pulled up. Let me go to the. I'm going to pull up the daily as well. I did pull up the daily, and I was discussing that in the room today. So let's just pull up the daily here. This is what I'm seeing here on the daily. Did see a nice little upside wedge, and we started breaking out of that wedge to the downside. And so I'm seeing dollar weakness across the board right here. This is the channel, and I'm expecting dollar to go ahead and test the the breakout right here to about that level. So we could be hitting down quite a few points down south. And I'm looking over here and I'm saying, okay, if we go to an angle, we're looking at the around about February. So this could take us all the way into February 2020. But I'm looking bearish on the dollar daily. And if I go to the weekly, this is the weekly right here. The weekly, there's that wedge that we broke out of. And so I'm looking for price to go ahead and retest this level down here at around about 12,000. And I'm going to go pull that up to about here, right about there. So definitely bearish, and this could also be a counter if we do get the conservative party starting to drive the pound crosses, and we start to see some bearish movement on pound crosses, specifically pound US dollar. Then this is going to be a battle between pound being weak and dollar being weak as to how far we can see it move. Definitely we're going to see it bearish, but it may not go as far as the other crosses that we're going to see. But in case, coming back to the dollar crosses, we're expecting weakness. Now, I think what we need to do, Chris, is just go into the short term. We may see weakness midterm and long term, but in the short term, with the news coming out, it may be a different ball game.
Yeah.
Because if they keep the rates unchanged, I don't know if that's going to be a negative reaction to the market. So if I look at the short term right here, let's see if we're looking for any sort of correction. And I'm looking at a 1 hour time frame. And what I do see here is, we have a bearish move to the downside. Price has come off a very shallow retracement, just shy of we're at the 2-3 right here. And so I'm seeing this as possibly maybe a range that it's going to come back into. So I won't be surprised if they keep the rates unchanged, which looks like it's going to be the case, that we're going to see a stronger dollar just in the short term as we start to retrace inside this downward AB move, and then go ahead and start maybe by the end of the week, beginning next week, continue its bearish move.
Yeah, I think I'm going to be looking to see what the daily candle closes. Like if you scroll back a little bit to a slightly bigger chart, I've got the same patterns. I've got the rising wedge up there, but I actually have a head and shoulders on top of that.
On the daily?
Yeah, so you can connect those previous lows back around May and June. If you connect those lows to the September lows, that's kind of my neckline that I'm drawing out. So start back in like May and June.
Okay.
and take those lows and just kind of connect those lows to the September lows, just like that. So we're kind of sitting right on the cusp of like, can we break a neckline? Are we officially going to break that neckline? I mean, I hope that we do, but I'm also fully prepared for this week to be a fake out and it pulls up one more time and tries to test the right shoulder again. But I'm the same way. It's like short term, the dollar just doesn't want to budge. But medium term, long term, I think it's going to be an inevitable catalyst that drives it lower.
Okay, so you're looking at this right here is your
Yep.
neckline right here?
Yep, exactly.
Okay. Okay.
So it's just, you know, we're stacking up bearish patterns. They all tell us the same story. It's just where are we looking for entries and where we're looking for continuation. But I am definitely in agreement with you that if we're going down, you know, 12,000 is a great level. In fact, there's a yearly pivot this year at 12,032. That is currently, I mean, what, 230 points lower. So even if that's pip for pip, you're talking about 200 points or 200 pips per currency pair, hopefully of movement across the board. So we're looking at a basket that could generate over 1,000 pips pretty easily.
Absolutely, yeah.
Yeah.
So now let's go into, we've got about a minute left.
Yeah.
I'm going to go into one of the crosses against the dollar. And I think while we're talking about the pound cross, let's take a look at the pound and see how the pound against the US dollar reacts.
Mm-hmm.
Now, my reaction would be that positive news, keep the rates unchanged. We're going to see the pound, the US dollar head south. Let's take a look here. And I'm going to look at the short-term outlook right here. I'm going to clean up my charts a little bit. So this is the chart right here. So I'm expecting, well, it's going to be an easy breezy move down here because we're wedged at the moment right now. So that should be a no-brainer right there. I think we're heading south in the short term. So we're probably heading south. How many pips could it be? Well,
about 70 maybe.
Yeah, 70 pips. So maybe a 70 pip move on the pound US dollar. I think while we're on this, let's go grab another one just to confirm.
Sure. Yep. Rates are the same. They held at 1.75.
Yeah.
Powell has a press conference at 2:30.
And we get a slight little bearish move there. Nothing crazy.
Yep.
And I didn't expect to be a huge mover. Maybe it still surprises us, but I don't see it coming. Nope. Let's see if we can pick up maybe another. Pound JPY. I'd like to see. Sorry, US dollar JPY. I'll come back to the pound crosses now. But US dollar JPY. Yeah, nothing really. It's got support down here, but it should be a positive move on dollar. So yeah, it should go north.
Yeah, it's such a vanilla statement. I'm actually reading the FOMC statement for today, and here's my favorite thing. I mean, you know, we live in the U.S. Some of you live in the U.S., some of you don't. But I love how the overall inflation and inflation for items other than food and energy, which are rising like crazy, are below 2%. So it's like the things that really, you know, hit the consumer wallet the most and staples and, you know, kind of the non-discretionary items are what we really feel the inflation levels at. But as far as everything else that, you know, the Fed takes into consideration, inflation is still running below 2%. So they're still looking at price stability and maximum employment. We've had, I don't know how many months of job growth. And I know that last Friday's job report was like 266, which I'm sure there's a lot of seasonal employment that was taken into that, which is expected. But, you know, just another celebratory data point for the U.S., I guess.
Well, you know what? If you actually take a look at the details from last week, I looked at this this morning because I was out hitting the streets of New York on Friday. But if you take a look over here, I mean, the jobs came out. The non-farm employment change was good, 266. The unemployment rate dropped down at 3.5% from 3.6, which is great. But if you actually take a look at the average earnings, there we dropped. So when I look at this, when I look at the details right here, I don't see this being positive because it looks like people are taking on jobs that are overqualified for and not really getting paid what they are due. And so it tells me that there's a lot of desperation going out there. People just taking on jobs just because they want to get a job. So we're getting the employment rate showing that it's dropping, and we get the jobs increasing, the amount of jobs that were, you know, that are hired over that period. but yet it's not showing a good sign for the economy.
Yeah, I mean that's month over month earnings. You notice that there was a positive revision the previous month, which is a slight. So I think that's kind of a wash for the November jobs. But also, if I'm not mistaken, the year over year was on pace or slightly better. I'm actually going to go to let me go to Forex Tips or FX Streets calendar. I think that there's a year over year. Let me try to find that from last week. So I'm going to look at the economic calendar from last week. Because that one that just showed the month over month. So let me go to crap. How do I go back to last week? I don't know if I can. I'm trying to go back.
Go to the calendar.
Yeah, I'm trying to see here. Not seeing it. I can go this week and next week, but not last week. I'm using a different calendar. So let me go to FX Street and see if I can find it.
Okay, gotcha.
I don't know if anybody has that number, handy. I doubt it. But let me try to find it real quick. So just a little discussion on the economic calendar for the U.S. last week. So today, tomorrow, recent, next, impact. Let me go to the calendar for last week. There we go. So it's the 6th. So we have Friday, December 6th, non-farm payroll. There it is. So unemployment rate positive. Average hourly earnings month over month was 0.2%. So that was 1/10 missed. The labor participation in November was a slight miss at 1/10 of 1%. The average earnings yearly was expected to be 3%, and it came in 3.1. So there's a big, giant 1/10 of 1% difference. So the year over year was 3.1, which was seen as positive, versus the 0.2% monthly, which was 1/10 of 1% negative. But anyway, I mean, I want to see a weaker dollar. I don't care if it's positive or negative. I want to see a weaker dollar. That's what the bigger time frame to me suggests. So It's just, I mean, so really it's not about non-farm payroll. It's not about, I mean, it's like, what is going to weaken the dollar? It's not non-farm payroll. It's not jobs. It's probably going to be the Fed. It's probably going to be US and China. Like something else has to be the catalyst here. That's all.
Yeah. No, true. Absolutely.
Yep.
And they said that they'll be keeping them on hold through 2020 as well.
Yeah, correct. I mean, we're going into next year with a very neutral Fed for sure. And I'm curious how the stock market's going to finish on that point. But I think that also if the market puts the pressure on the Fed, I think they'll come back and cut rates again, which will completely wash away with what they did in 2018, which was raise rates.
Yeah, it's almost like that same scenario as I mentioned. Mentioned earlier on about it's like rush wait, you know.
Yeah.
And the Fed, same thing. They went and rushed in, and we started raising the rates like, oh, everything's great, and then suddenly, boom, start cutting, boom, boom, come back to where we were.
It seems really reactionary, doesn't it? From last year to this year, seems very reactionary.
Very. Doesn't put a lot of confidence in the with the consumer in looking at this, because you've got these guys that are supposed to be in control of things, and they seem to be, reacting very quickly to things and then backtracking.
Yep, exactly. So, okay, I'm ready to move on from the dollar if you want to. I think we've kind of crossed enough. And I mean, like I said, the statement was really, really, really typical, like very vanilla. In fact, I mean, it's like I've read this many times before, so it's kind of deja vu in that print. We've all seen that before. Yep.
Now, obviously, the impeachment, these folks are all talking about the impeachment right here. Will that affect the dollar? Yes, we will definitely get some some sort of effect on the dollar as well. Either way, it doesn't matter which way the impeachment goes. We definitely will get some sort of reaction in the market.
Mm-hmm.
It depends on what comes out, what the outcome is. Will depend on, of course, the amount of movement that we have and the direction we trade. That's actually a touchy story right there.
Yeah, we'll save that for another conversation.
Yeah. Here's the euro pound right here. We spoke about the euro pound. Let me flip over this to the large time frame. And so a lot of things going on here with the euro pound. But one of those pairs that you can actually make quite a bit of money on these pounds by doing some range trading. Range trading on this pair is actually pretty exciting. But in any case, here we had this is actually an broadening formation. It's also a sort of a consolidation pattern where it actually starts off tight, and then it opens up a little bit. We can see that, and I'm going to take this out because this does confuse a little bit on that, but we're definitely seeing this taking place here. So we're seeing price now at support. This is the support level. Now we've seen the others at resistance, but this one right here, we're seeing support right here, which again indicates that the pound is due for a stronger move to the upside. Sorry, I mean a downside,
yeah.
because the euro is expecting to go up north. So if euro rallies, that means pound's weakening. So that means this setup right here on the euro pound lines up everything that we spoke about on the other pairs: pound CAD, pound Aussie, pound JPY, pound New Zealand dollar, and now pound Swiss, and then of course euro pound. All of them indicating that price should be we should be looking for a weaker pound across the board. Now, let's take Chris. Now, I don't know if you want to add something to the overall pressure that we're having right now on the pound, right? But I'm looking at this now and I'm saying to myself, okay, so there's two scenarios. There's definitely going to be two scenarios, either bullish or bearish. The two scenarios is this: if we do have the Conservative Party taking control, we are going to see pound strengthen, right? Which means that we're actually going to be breaking out of the resistance and support levels that we're seeing currently right now. That means we have to then look at a way of how we're going to trade it if we do see the breakout.
Mm-hmm.
Now, I mentioned my strategy earlier on, how I'm going to be trading. I'm going to be waiting for the market to confirm the direction, and then we're going to trade that direction, which means that I'm going to deploy my system in one direction. Now, I may do this on Friday. If I start seeing a breakout on Friday already, we start seeing something happen on Friday, I'm going to be looking to either sell pound crosses across the board or buy pound crosses across the board. So it all depends what happens. But at the moment right now, this is the reason why traders, we cannot react right now. You cannot react right now because, one, let's say we decide to go ahead and sell all pound crosses and we're now going to buy euro pound right here, all right? We've got to go ahead and look and see what the brokers are charging us on spreads. Also, we've also looked at what happened in 2016. Remember that big wick, it was like a candle like this, that showed a 1,700 pip move. Now, from that 1,700 pip move, we don't know how much of that was actual price and what was more spread, and because during that time there was wide spreads. Chris, I don't even remember, just so far back, I can't even remember how wide the spreads were at that time.
They were high, but it actually was a pretty liquid environment. I remember it was after hours. I mean, we had the Scottish referendum. I mean, it was 5 p.m., 6 p.m., 7 p.m. Eastern time, like things were moving and shaking. The London session the next day was extremely active. So it was fairly liquid. I just, I don't want to trade at 5 p.m. I don't want to trade. It's like those exit polls are probably the trickiest time to trade. So just don't be suckered into like high spreads and low volume and high spreads and low liquidity. Like, don't be suckered into that environment because, again, 3 years ago was a very different environment than what we have right now. Brokers are a lot more sophisticated, even though it was only 3 years ago. Brokers have changed the game since 2015 Swiss National Bank, and now they can play around with margins and spreads and all this other stuff. It's a lot trickier. So I mean, it was a pretty liquid environment, but it was also, you had the trade shorter term. Yeah, I'd say the largest time frame you would have been looking at if you want to follow that flow would be the 1 hour chart, and just I've been telling traders this all week. If you're in any trades that are trying to get in and scalp or get in and participate, I would be very aggressive with a trailing stop loss, or I'd be very aggressive with moving a stop to break even. And if you want to get lucky and score a home run, let it run. If you want to take some profit, take some profit. But I will be really, really aggressive about moving stops and getting myself into break even or better. That would be my plan for this 48 hours.
Yeah. And I mean, traders might be saying, well, if I get in here and I put a 2,000 pip down here, yeah, I'll be good. Yeah, but the problem here is, let's say you decide to risk 0.25% of this trade. You're like, 2,000 pip, 0.25% trade. That means, traders, in order to make a 0.25%, you've got to go 2,000 pips going up right here. That's a long time you want to stay in a trade. Where if you wait for the opportunity here, it may create a better risk-reward ratios because of the stops being a little bit tighter and able to catch profits a lot quicker. So you don't want to go ahead and put a 2,000 pip stop on this trade because your risk on the trade is just too wide for the amount of time that you have to wait for your profits to be able to generate. So, again, put in stops in, and some traders like to trade without stops, and I mean that's always never going to be a way to go. Don't ever do that. But we get traders out there that puts no stops in, and say, hey, you know what? I got a mental stop right here. Well, you're going to be mentally broken by the time the market drops back down to that level, especially if you haven't calculated how much risk how much percentage risk you actually taking on that trade.
Yeah,
so you're going to make sure that all that's been done.
And we could see a lot. I mean, I don't think there's going to be a flash crash necessarily for today and tomorrow, but you just never know. I think that what we need to do is we need to stay in the present. We need to trade what we see. We need to trade confirmation. But honestly, I mean, the charts that Gary is showing are very clean. There's not a lot of noise in the higher time frames. When all of this plays out with all the volatility that's going to hit us in the next 12, 24, 48 hours, when it all settles in, it's going to make sense. It might not make sense over the next 2 days, but when it's all said and done, these charts are probably not going to have anything out of the ordinary. There's probably going to be a move to the upside on this chart. There's going to be moves to the downside on the other charts because we have big levels of support and resistance. So, I mean, that's the beautiful thing about looking at the structure on a higher time frame is you just see the bigger picture with a lot less noise. And then if you're trying to get into the into the details of the shorter time frames and into the trenches, that's where things get a little messy because it can be very, very noisy.
Yeah, absolutely. Now, Tony said it reminded me that he traded with me back in 2016. We're trading over a 15-minute time frame at 300 pips, or at least have a stop loss of 300 pips right there, and so that was at that time, and I don't know. I remember something. Tony, I can't remember the details exactly. I think I'm getting too old for this, but I remember us getting into trades, some short-term trading opportunities. But the most important thing right here, traders, is that we have to make sure that we have at least a directional buy. Let's connect the fundamentals and the news. Fundamentals and the technical together. If I've got a confirmed technical and fundamental direction, I'm in. I can trade that all day long.
Yeah.
And if the brokers are good to us and they don't really destroy the spreads, I think we've got something to work with. The one thing that I'm also a little bit concerned about with the brokers, Chris, is that
there could be. Do you think they could freeze trading? If it gets really nasty, they could freeze the platforms.
That's the one I'm worried about.
Yeah.
That's the thing that I'm really concerned about. This is the time that they take to fill your orders, and that they first want to figure out where the market's going. So if you enter at a very volatile time, you could end up having that sort of issue right there. And I have multiple accounts. There's no ways I can even have that issue at all.
Yeah.
So I probably wouldn't risk it.
So I'm going to go ahead and add, go ahead, keep going, Gary. I'm going to add some information on when we're trading here. So we've got the election scenarios. I'm just reading through the slides. What I'm going to do today is everyone, I know that some traders have left, but everyone that's sticking around before we go today, I'm going to send a PDF through this webinar, and you can download a PDF. Obviously, just a little bit of overview of what we're doing today, and then just the highlights that Gary and I have added to this. So I'm going to throw in we have our election scenarios. We have our strategies we're talking about. We have our analysis with charts, and these also have hyperlinks on them to see all the charts. And from there, I was going to throw in the trading windows. So polls. Oh, go ahead, Gary. Okay, cool. There's a good question here from Carol says, is this going to affect other currency pairs a lot, like the Aussie, CAD, New Zealand? Now, remember, traders, there may be a slight spin-off from what happens here in Brexit because it does influence. Look, the world economy is going to be affected by what happens with Brexit because in some way they will affect other countries too. So there will be some movement coming out of the other pairs,
but we're not going to see the vast moves that we're going to see on the pound crosses. We're not going to see that on the other currency pairs. But there certainly is going to be some movement in the other currency pairs as well. Yes, absolutely. How they get affected? Well, it comes all. Well, let's put it this way, and Chris, maybe you can support me by giving the answer to that as well. But the other currency pairs will be in some way affected, because if we spoke about that, I think about 6 months ago, and we showed that there was a lot of emphasis on the UK making a decision because of the fact that a lot of countries, a lot of countries are actually concerned about going into recession. And that's the reason why they've been backing off on the raising of rates and starting to cut rates, is because they're trying to avoid a recession. And the one thing that's also pushing and driving them into this is the decision and indecision, or let's say the indecision and the procrastinating of the Brexit deal, that has created some issues around that as well. So again, I don't know the inner details of that, but we certainly know that there is going to be some sort of effect on the other currency pairs. So, and that's why sometimes it's always good if you're going to stay off the pounds, hey, pay attention to some other currency pairs. You're certainly going to get opportunities there. You want to add something, Chris?
No, I was just going to add, I'm just reading through some questions here. Matt's asking when we're going to trade. So look, we have these sessions. We're doing the same time every day. So today, tomorrow, and Friday. So we have about 35, 40 minutes before we're going to wrap things up for today's session. So Gary, I think what we might want to do now is start getting into some specific strategies. I'm focused a lot more on short-term strategies. So maybe it's probably best for me to run with the screen and talk about a little overview of the London breakout session and maybe some micro price detector, and see how traders can get involved with the trading windows we're talking about. I'm primarily looking at short-term trading simply because I will be aggressive on a stop loss. I am willing to trade any type of volatility the market gives us, but keep in mind that you have to be leery of the spreads and the margins. And obviously I'll probably trade half of the trade size that I would normally trade during the news.
All right, so I'm going to flip it over to you, but before I do, I'm going to just go into one indicator that everyone can go ahead and download, because this is going to be really the deciding factor right here. And I'm also going to tell you the time frame I'm probably going to go ahead and use as well. I'm going to probably use a 4-hour time frame to confirm my direction. And if you can take a look over here, you can see that on my chart I have what we call the Ichimoku cloud. It's going to be available inside your indicators list right here. Just go ahead and scroll down. You should see it just a little further down right here. There it is, Ichimoku Cloud. It's in the general section. Go ahead and click onto that, Ichimoku Cloud. All right. Now, it's this indicator that you're seeing here on the top of my, at least on my chart right here. Now, that indicator is going to give me my trend bias, right? It's going to confirm the trend bias. So if I go ahead and flip over just quickly before I hand it over to Chris, you'll see here that on the 4-hour, I'm showing, let's go to Aussie, pound Aussie here first. So pound Aussie shows me that I'm currently right now bullish. Now remember, traders, just to remind you, if we're above the cloud, we're bullish. If we're below the cloud, we're bearish, all right? So the reason why I looked at my larger time frame is to identify what type of direction I'm really looking for. Now, remember, I said that we're at resistance. So if we're at resistance, that means I need to see the market break south in order to go ahead and confirm that we've seen a bearish move on the pound, all right? Now, if it breaks the resistance and we see a continuation of the move going long, then I'm going to have to wait until next week until we get a dip and then rally again, and I'll probably get in on that dip. Now, what I can do is I can trade a short-term, and we'll talk about it over the next couple of days. I can trade some short-term opportunities, all right? But for right now, I want to just take a look and see what our confirmed direction is. So I'm going to go to a couple of more right here. Yes, pound Canadian. Pound Canadian, we're still bullish on pound Canadian. Remember, I'm thinking pound Canadian is going to head south, so we're going to be heading south of the cloud. Let's go to pound JPY, and pound JPY right here. Let's go to pound JPY, and there it is. Okay, just a slow. All right, and then pound JPY is also bullish. Now, one thing you must also take a look down here. You see this right here? See how it's all red? All right, that indicates that we're in an overbought condition, a very overbought condition, and price is starting to, well, actually, momentum starting to push in the opposite direction as price. So we're starting to see a momentum actually sliding south because we're seeing some red down here. All right, that means we're in a very overbought condition, and price momentum is starting to move down. Even though prices are still bullish, we're seeing momentum move down. I'm going to go to one more pair, and I'm going to give Chris the opportunity to go ahead and share. And there, yeah, you can see pound Swiss franc price is still bullish at the moment right now because we're above the cloud, but we can see that momentum is starting to shift and starting to head south. So just want to go ahead and show you this. And again, this indicator, the Ichimoku cloud, can be found in the general settings, all right, under the indicator tab. And here we go, pound Swiss franc. What's the pound New Zealand? Man. Pound New Zealand, let's try that again. There we go. And pound New Zealand is just about to go ahead and head south. We're still above right there. So I'll be keeping out on the 4-hour time frame over the next 24 hours. And once, or these 48 hours, once we get the directional bias, we get the results, I'm going to be making sure that I trade it in the direction of the trend. Very important. And so you can follow with me as I go through these trade setups and look for trading opportunities. I'm going to be looking at this indicator, and if I have to gear it down, which means that I move down to a 1-hour time frame because it's maybe offering better short-term opportunities, we may do that. But we'll go ahead and track the 4-hour time frame first. Chris, over to you, my friend.
All right, man. That's good stuff. Yeah, if you don't mind monitoring the question box while I'm going through, here's my screen. So, like I said, we're going to send out a little PDF. These are the slides that I've added. So we've got the UK scenarios. We have our strategies here with also the times that the polls will be open. So this is 7 a.m. UK time to 10 p.m. UK time. And then there's going to be exit polls after. So we have the exit polls after the polls close for anywhere from 2 to 4 hours. The best trading windows, in my opinion, that will be short term where we expect to see the volatility. Thursday's active zone. So when UK opens 7 a.m. UK time, that's 2 a.m. Eastern time. That is the Frankfurt Open. That is just before the London Open. We might see the markets break right out and offer some pound movement tomorrow. Would I get overly excited about it? I don't know. I mean, it's like the polls are open for the first hour, the first couple of hours of the day. There could be a pretty active breakout, and that's fine. If you want to trade it, that's what I'm going to show you. Just a simple London breakout strategy. I'm also going to show you the micro price detector. All right, so Thursday's active zone. Then once the polls officially close and there's the exit polls, that gets us into, I'll put an asterisk right here. Friday, let's see, dead zone's not what I'm going to trade, but the Friday Asia session, I would say 8 p.m. and after, because we will have the polls closing right around 8 p.m. Eastern time. So around 5 p.m. Eastern time, the polls will close. We have those exit polls. That's 5 p.m. That's a rollover period. That is the lowest volume, lowest liquidity setting in the market. So that dead zone can be very tricky for some market flashes, some gaps. That's when we had the flash crash in January of this year. All the Aussie pairs, the yen pairs, those were around 5:30 p.m. on January 2nd. The first day back from trading a dead zone trade, and boom, some crazy flash crash. So that's like worst case scenario. But once we start to see Tokyo session opening and starting, that's around 8 p.m. Eastern time going into the Friday London session, and trading all day Friday should be pretty straightforward for short-term opportunities. So that's what I'm looking for. And then we have all the hyperlinks here for the strategies that Gary's trading, his end zone trader, the Ichimoku cloud. Download that. That's awesome stuff. For me, I'm looking at the micro price detector and the London breakout. These are the charts with the screenshots. These are all hyperlinks. So you can click on that and see the chart. I mean, again, technically speaking, we're looking at the same thing. I like the weekly charts. I like the higher time frames. They're suggesting that the pound will get weaker when all the dust settles here. Okay. All right. And that's it. So we'll send this out with a PDF. That looks pretty good. If we add anything, we can add anything to that. I'm going to go into the charts now. I'm just going to keep this super simple. And let's go into, this is my workspace. I'm going to go into a simpler workspace. Let's go to I just need like a 1 hour chart. 1 hour news will work. Something really simple. So this is perfect for the London breakout. So I'm going to go ahead and change this up to any other chart. So let's talk about pound. We'll go euro pound first. We'll start there and then work through the pound. So what I'm looking for here, this is my London breakout strategy. So this would be tomorrow morning from 3 a.m. to 4 a.m. Eastern time. So 3 a.m. to 4 a.m. Eastern time, 1 hour candle. Okay, that's the candle that I'm looking for to see price create some structure. Okay, so David says, how are you sending out the slides? What I'm going to do is I'm going to convert this into a PDF. So I'm going to download this as a PDF and I'm going to attach it to this handout section within this webinar. All right, that's how I'll send it. If you're an MTI student, I can also send that PDF to your educational specialist and they can have it for you if you're not able to download it through this session. But if you are here and you can download it through the app or download it through GoToWebinar, I'll give it to you that way. Okay, so 3 to 4 a.m. Eastern time, that's going to be what I'm looking at for structure. So let's take a look, for example, today. This is the 3 a.m. candle right there. This is the 3 a.m. candle, so this is exactly how we could trade this going into tomorrow's London session. There's your candle. Okay, so when this hour starts and hour closes, it's going to real time, like that. So this hour is starting, this hour is closing. What you're going to be doing is looking at this as the low and this as the high. And as soon as that hour is closing, I'm going to go into a 5-minute chart. Okay, so first, before I move on, type in a wire yes if you can see this. This is a 1 hour candle from 3 a.m. to 4 a.m. Eastern time. That is the equivalent of 8 a.m. London time. Okay, so this is the hour candle that we don't have to do anything with. We just wait for it to open, wait for it to close, and then we start looking at a simple strategy. So the hour is done. Mark your high, mark your low. I like to go to a smaller time frame. I will go down to the smaller time frame like the 5-minute, which is right here. This is where my hour closes. So I have my high and I have my low. I am only interested in the close above or below this range. That's it. So you notice that price pulls back? I'm not doing anything with this. I'm not trying to draw some swing on this and say I'm going to sell it. I don't care. It's got to break out. This is a London daybreak, London breakout strategy. So I need the body of the candle to close lower. And there it is, right there. Okay, so that's going to be my sell trade. That's my sell trade right there. And then my stop, I mean, I would just look at some price. I would say that my stop loss is going to be right above this high. You know, I go a couple levels back. There's a, high to low, lower high to lower low, lower high to lower low, lower high, hopefully to lower low. And if we get this, then we can move our stop pretty aggressively. Okay, so it's not anything amazing. It doesn't take all this time and analysis. It's just, there's my stop. I put it right up there, turn that red, and see what happens. So that's my breakout. That's my sell trade I'm in. If you want me to turn this, let me copy and paste that line. And I'll make this one blue as an entry. So we're going to be entered in here. Okay, everybody following along? So we're in right there at the close of that 5-minute candle. Can you see the difference between my support and resistance? So this is a black line. I'll make that solid, and I'll make this solid. That way we have our enters and stop losses there. So we're in on the blue line, and our stop loss is above this previous high. Let's see what happens. Okay, now it's at one of these points. I mean, keep in mind, I don't want to be up all morning doing this either. So this entry, that's a good point. This is around 4:30 in the morning, Robert. So this is 4:30 a.m. Eastern time, which is roughly 9:30 a.m. UK time. So you're entered in here. It goes down just a couple of pips, pulls back again, a lower high, and then pushes down. Now this little push to the downside right here is around, are you kidding me, man? Yeah, I was getting all excited there, but I'm like, it's 7 pips. So yeah, you're barely covering your spread. That sucks. Anyway, let's see what happens. All right, we finally get a push to the downside. So where's it at? I mean, again, we're expecting a lot more excitement out of this. This is, I mean, come on, we're a day before this election, but this entry didn't get stopped out. We're up 8 pips, pulls back, pulls back, pulls back. We're up 13 pips, pulls back, pulls back. We have a low around 17 pips. Yikes. But is it positive? Were you able to at least move a stop loss? Could you have grabbed 5, 6, 7, 10 pips? Sure. But believe me, and Gary, correct me if I'm wrong, but I would expect to have, 30, 40, 50 pips of movement on those breakouts tomorrow and Friday.
Yeah.
I would think that the pound's going to be a lot more explosive coming out of tomorrow's trading and Friday's trading than what we saw today.
Yep.
But this is exactly what I'm doing for the strategy. Yeah? Agree, Gary?
Yep, absolutely.
Yeah.
Go through another example. I know that on the 5-minute chart, you're expecting to see a little bit more movement. But
Yep.
yeah, go to another period, do another example. I think
Okay.
that was a good call on that.
All right, sounds good. So yeah, let's go to the pound Aussie now. Let's go 1 hour chart. Let's go pound Aussie. And again, you can just see what the formula is. This is, let's see here. Let's go into today's candle. It's going to be something in this area. That's 2 a.m. That's 3 a.m. Okay, so there's our range. Let's go to real time. There's our candle right there from 3 a.m. to 4 a.m. So let's get the high marked right there. And let's get the low marked right there. Let's double check that. That's the 3 a.m. Okay. So there's our high, there's our low. Let's go into the 5-minute chart. And what do we have? And this is actually a great example. And here's why. And again, keep in mind that today's price action was pretty lousy. But this is a good example because you see that we have a close above. But what happens immediately after that? Okay. If we close above and we take a buy trade right there and we immediately face a bearish candle, I would probably close that right away. Okay, if you want to keep a stop loss right there, that's fine, but you notice where you're trading. You're actually letting price come back into the range. You're letting price come back into the 1 hour structure. So essentially, this is not a breakout until much, much, much later in the day. So this would have been a breakout around 4:30, around the same time we saw the other one, but it turned right back around here. At 4:35, within one candle, it closes bearish. And then it takes 7 hours to get the breakout from the 1 hour structure. So I'll tell you what, if you can't get a trade within the first probably 30 to 60 minutes, I'm probably not going to babysit it and I'm not going to trade it. I'm just not. So that's where I'd be looking for something like the micro price detector to try to pick up some movement. This range, by the way, from low to high for the hour is about 40 pips. If I'm trading a micro price detector, I could probably grab maybe 2 to 3 boxes of pips in here and somehow scalp like 10 to 15 pips, possibly. And I'll show you that in a second. So again, it's not, I'm not here to wow you with the numbers on today's setup. I'm here to show you the strategy that we're going to do on Thursday, Friday, because if you looked at this back in, Gary, you saw this with me. If you traded this at all in April, at all in May, at all in August, September, October, when we had some really strong movements on the pounds, this thing was like a singing strategy. It just created these wild breakouts every single day. The pound was on the move. The pound had a destination, and it was a really, really simple strategy to trade and participate. Yeah.
Yep, absolutely. And you know what I'll be interested to look at is Brexit in 2016. What happened after Brexit in 2016, or at least during that time? Because there was traders, and I think Tony was one of them, that actually was trading the breakouts of the London breakout based off the fact that we had Brexit that was in the making right there.
Yeah.
So if you go to Brexit in 2016,
mm-hmm.
and look at the details of the London breakout, just like you said there.
Yep.
This is pretty much what we can anticipate heading into the news this week. I think it was the 24th, right? 24th.
This was June 2016. That was breakout. That was yeah.
The 23rd, yeah, 23rd,
yep,
24th, yeah.
Yeah.
So go to the 24th because that would be in the breakout 24th from the 24th. If you look at the 24th.
Yep. And this is a daily chart, Gary. I mean, we can go into the breakout and go to these smaller levels, but you're going to have this crazy move to the downside. Yeah. You've got, and again, let's talk about volatility. Don't think of this like, oh, there's nothing on the day, but this high to low was still 500 pips.
Yeah.
So you talk about a breakout opportunity. I mean, this looks like an indecision candle, but you're looking at a 500 pip day. You're looking at this next day, the high of 81.30 to the low of 79. That's 200 pips. I know it's a different environment. We had a lot of volatility surrounding that breakout. So that's what we can expect, at least having some better pushes and better movement coming out of this election, hopefully tomorrow and Friday.
Yep.
Yeah. So, okay, let's go back. So we did, pound Aussie again, pretty straightforward stuff. You can do this literally on every currency pair. This is what I'm looking to do to keep it really, really simple. So 1 hour chart, here is your, let me try to find it here. So there's 6 a.m., there's 3 a.m. All right, so there's a 3 a.m. candle. Let's get the high and low. This one actually saw a decent, this one actually had some traction to the upside. So there's our 3 a.m. high, and there is our 3 a.m. low. And the reason I like this is you don't have to do anything. It's like we get so, I mean, I don't know if you remember, Gary, but do you remember when we were looking at volatility that was, 100 pips a day, 200 pips a day, and we were using like a 10-minute candle breakout?
Yep.
Like within the first 10 minutes of the London session, we were trading. I mean, and that's great, but I mean, this to me is just a much cleaner structure, especially for the day. Like you can get some decent movement on a nice, slightly higher time frame trade. 10-minute chart can be, your best friend or your worst enemy. Just depends on what the market feels like doing that day. But this is, again, things change, the market changes, and it evolves, and so do we. So there's our 1 hour candle right there. So take this down to the 5-minute. Go back. I mean, you can see the structure pretty cleanly. Think about price action. You have a trade right here. So here is your entry based on that candle close. We finally have a nice bullish candle to the upside. So I'll take this and make it blue. There's your entry. Your stop area, I would say, is going to be somewhere just down here below this little subswing, also inside the range. So it's not a big stop. And if you're following along with some price action, we have a break to the upside. You take your confirmation trade. If you're comfortable with the strategy, which hopefully you are, you should be, this is entry 1. What is this? You have the low of the candle, the high of the candle. All this is doing is breaking and pulling back. It's pulling back to that breakout of the candle. So this is your indecision on the 1 hour chart, and there's your breakout. So this actually offers, trade 1 if you want it, and trade 2 at a slightly better price, and your stop loss is in the same area. So you can definitely trade some price action, and this will help you improve your break even a little bit. But if you don't, you just take the one simple breakout trade, it doesn't invalidate, and all of a sudden you see price going higher. So this is what it looks like. This is what price produced. It's ended up going up about 39 to 40 pips. That is more what we want to see. And the best thing is if price does something similar to this tomorrow, then we're going to see a nice clean move for hopefully 50 pips, 100 pips, or whatever. What I like about this is something that traders might be familiar with for me, and that is pocket trading. And Gary, what is that right there?
Huge opportunity.
Pocket right there for sure. So that is why, in my opinion, price came back to where it did. It came right up to that inefficiency. That's a great trade to target that level. That's a nice 30 to 40 pip trade. So that's it. I mean, and as this is going your way, it's the trader's responsibility, as the trade is going our way and we're up, here's our entry. Here's the high that forms. When price is making higher highs and higher lows, I would take this stop loss. And at some point when it's on its way up, I'm going to move my stop loss here, move my stop loss here, move my stop loss here. I am trapping those profits really, really aggressively. At the very least, when price goes your way and starts breaking these highs like it did here, move your stop loss to break even and turn it into a trailing stop loss. If you go to, let's say you go to +3 or +4 and cover your spreads and cover your commissions, and it's a +3 position and you're trailing the market by, 15 pips. Well, if this goes up 15 pips and your stop loss goes 15 pips, you just lock in like close to 15 or 20 pips. That is better than nothing. That is better than break even. That is better than losing. So this is what I'm looking to do, is doing some, kind of basket trading on the pound breakouts. And that's another thing. I mean, this is a really easy way to use the tool that we have here for our Basket Trader Pro. If anybody has that system, Basket Trader Pro, you can look at our pound pairs. So if we unanimously see pound weakness, for what, let's just go both scenarios. If we've seen pound weakness, then that means we go to all here, and our pound weakness, we're going to sell, 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 done. And then you'd buy the euro pound. I mean, you can drag them all, or you can trade them. You can have your charts up and running. You can monitor those 5-minute trades, or you can just build a workspace out where you're watching all of these levels. Watch your 5-minute levels, watch your 5-minute levels, and the basket will be in control. I think the pound pairs, as it starts the London session, the pound pair should be fairly uninterrupted. It might be volatile. It should be volatile, but it should be uninterrupted. The CAD influence, the Aussie, New Zealand, all those other currency pairs that it plays with aren't really a factor tomorrow. I think that everything around this election is going to be pound centered. So that's where I think a lot of the strength and weakness is going to kick in. It'll be very much pound driven. So any questions on that London breakout? Any questions on what we're doing? We're using the 1 hour chart. Okay, we're using the 1 hour chart to find our 3 to 4 a.m. candle. And then we're going to look at a 5-minute candle to break above or below for confirmation. And that's our trade. Stop loss is, within a reasonable period. It's just little structure in between the range. And if we can grab, 20, 30, 40 pips, eliminate risk, turn it into a trailing stop. And look, I want us to have some big wins with this, right? I mean, if this thing goes, 30 pips higher and never pulls back and goes, hundreds of pips higher, then I want to be in that trade with a trailing stop. There's to me as a trader, when I'm in the market, if I'm in and I move my stop to break even and it's trailing, my mind is not worried about the trade anymore. I'm not worried about the trade any longer. So if that is going to cooperate and go my way, my stop loss does all the work for me from that point forward. Now, if I get in the market and I eliminate my risk and all of a sudden price comes back and stops me out, then the question is, what are we going to do from there? Do we decide to get back in? Do we decide to chase this the other way? Do we decide to follow the volatility and just try to, make our head spin with all these entries? That is why I have another strategy. Because the London breakout is a very simple, set it up, take the trade, grab some pips, move a stop loss. I mean, it's a manual-based trade the way I do it. But it's meant to take some really easy breakout trades. The next trade is bring on whatever confirmation this market gives us, bring on whatever movement this market gives us, and that's why I like this price style, the micro price detector. Okay, so this is a micro price detector. I'm just deleting all the drawings here, and I'll go into a 10 pip box size. So every box that you're going to see on your chart will be representing 10 pips of confirmed movement. Okay, and so what I'm thinking of doing tomorrow is trading this with, and I actually have a robot to do this. I'm going to trade this with 2 bricks in and out. Usually when I trade the news, and traders that have done all these major market movers with me have traded 1 brick in, 1 brick out, and we're pretty aggressive on the movement, and it's, in and out, we try to grab 30, 40, 50 pips. This, with kind of a whole day worth of volatility, I'm going to trade this with 2 bricks in, 2 bricks out. So I have the micro price detector script right here, and I'm looking to start this up. And I'm not doing it now. I'm gonna start this up during the London session tomorrow. I'll put it on my MPD live account. Okay, so I've got visualization here. I will buy and sell. My box size will be 10 pips. My brick count will be 2, and my brick count out will be 2. And the reason why is if we have an aggressive snap or a pullback or retracement, hopefully it's not enough to close against me and change the brick colors or the box colors. Hopefully I can stay in the trade. And what I want to see is I want, 10, 15, 20 green boxes in a row or red boxes in a row. And I want to ride that thing as long as I possibly can. So trade size wise, I will probably do a probably 0.05. I'll probably do a 0.05 and I'll probably add a 0.05. And I understand that I might take a few losses. I'll probably put this at a max of 5, or if I'm going to let it go for most of the day, I'll let it go to max 10. Okay, but understand that if I'm going to increase my trade size by 0.05, 0.05, 10 different times, that's going to be a bigger trade size. So I will be monitoring this, but I want to see if this thing moves. So all I'm doing here with this is setting up with a 10 pip box size or 10 pip brick size. 2 bricks are needed for confirmation, and 2 bricks are needed for confirmation to close. So entry and close are based on 2 bricks in the same direction. Okay, so what this would look like from right now, if I deployed this robot right now, this would have to go 1, 2 bricks lower in order for this thing to take a sell trade. And if it stays red, it stays in the trade. If it stays red, if it stays red, if it stays red, if it stays red, it stays in the trade. Now, if it goes 2 bricks the other way, this would be, confirmation, brick, brick, brick in my favor, and then it pulls back 2 bricks. Now that would be where I close. But I also close it for break even, and I get in the trade to buy it because that's 2 green bricks in the other way. Then if it stays green, 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 green. Let's say we have a big move tomorrow. Sorry, I'm not drawing those the same length, but you get what I'm saying. If we have this big move that all of a sudden, remember, every brick is trying to pull minute data. So in every 1 minute of time, if price is moving and confirming 10 pips of movement, then a brick will print. So all you see here when these bricks are printing is every 1 minute of data that the market can pull. This is just showing movement. So it doesn't matter how long it takes. If this takes 6 hours to make one more brick to the downside, that's all you're going to see on your chart is one brick to the downside. But with tomorrow's London session and the polls being open through the day and most likely having some movement through the dead zone in the Asia session, this should be a pretty exciting strategy. So I might jump my trade size. I might reduce it a little bit. I might reduce it to 0.02, 0.03. I might go pretty small on it. Okay. I'll probably do a 0.03 to be honest, now that I'm thinking about it. But 0.03 that maybe takes me 2 or 3 trades to get into, it's going to be a slightly bigger trade. All I'm looking at tomorrow, traders, is look, I'm not trading this personally. I mean, if I make 500 pips or 1,000 pips, that would be freaking awesome. You know, for me to make 2, 3, 4, 500 bucks for this, that'd be awesome. I'd be happy with that. You know, I mean, it's not, to me, this announcement and what brokers can do is not about trying to make, you know, 50 grand or 100 grand. Did we have traders do it in 2016? Sure. Yeah, we had traders that did it. But again, those traders also run the risk of ruining everything too. They could have easily lost $100,000, but nobody'd hear about that. You know, nobody wants to talk about when they lost. But Gary and I, as real traders, are going to tell you, we're always thinking about the downside. You know, it's been way too much work this year to make the profits that we have for us to give it all back and piss it away with, you know, just being stupid and irresponsible for an election. So let's be smart, let's be responsible. And again, we should see some good volatility and have some fun with this. So this micro price detector, and the best part about this is if you don't have this, if you don't have the automation, you can still get just the price style. This is a price style that we have inside our charts. So the micro price detector right here, you can see that we have red boxes and green boxes. So once your price style is up, oops, I don't know what happened there. Once our price style is up, let's go micro price detector. Let me double check the settings. Yeah, so fixed and 10. That's what I'm doing, is I'm just adjusting the chart settings. So this represents 10 pips of movement. So if you don't have the actual micro price detector robot or the script, you can still trade this manually. As soon as this thing prints green, you know, if you wanted to go 2 bricks green, then take your buy trade there, and then you wait. The hardest part about trading this strategy manually is there is no time. Okay, like I said, it might take hours. You know, if it's, let's say we go 100 pips. If we go 100 pips, we're going to see 10 boxes. But 10 boxes could happen in a minute. 10 boxes could happen in 6 hours. It just matters of how long does it take for price to actually move and confirm 10 pips. And that's the only thing it does. So this eliminates time. This eliminates a lot of the market noise. If nothing is happening, traders, then nothing happens. If nothing is happening with price, then there will be no new boxes. Right? Yeah, I agree. Steve says tomorrow's not about home runs. The market has, yeah, singles will be good. I agree. And look, that's why I'm looking at something like get a trade in, move your stop loss to break even. And if you move it to break even, move it to +5, move it to +5 or 10, that'd be great. From there, turn it into a trailing stop. Because a home run is just, I mean, really, a home run is about letting your profits run. You know, I think that's how profits can run, is you just give them a chance. So setting a stop loss up and going to break even and then letting it run. And the same thing is true for this. If this gets us into profit, I could be running this script right now, right? And if I'm trading this and this is in a bunch of profit, I will get into my broker platform and I will move a stop loss and I will turn off the script and I'll let my stop loss just become a trailing stop. So I'm not going to overtrade it. If I'm in a ton of profit with this price style, then I'm going to take a stop loss and move it and let it trail and just let it do its thing. Or if I can sit in front of my computer and stay, you know, red, and I'll just watch it. But again, I want to walk away. I want to set it up, put my stop loss in, hopefully in profit, and walk away and see if we can capture some big pips. But if I can lock in 5, 10, 20, 50, that'd be excellent. right, for the day. I mean, if it doesn't really go against us, doesn't cause us any trouble, we can make 50 pips or 100 pips or more. That's awesome. And if we have a home run, let's get it. Let's get after it. But it's going to, I mean, in order for us to get it, we have to see movement. In order for us to get a home run, we got to see something more volatile than what we saw today, which is why we're talking about this all right now.
Okay. And I think, Chris, I think what's important to mention here, especially during the volatility that we're going to get, is when you're placing stop losses. This is something that they need to know, and Carol brought it up right now. When you're placing stop loss, you have to realize that stop loss is going to be filled as a market order, and market orders are filled at the available price. So, which means that if you put a stop loss order there, if the markets are very volatile and we have big jumps in the market, and if price jumps 20, 30 pips, you may not be filled at that price. You may be filled at the next available price. So keep that in mind as we go through the next 3 days.
And and what that can look like if you take this back to like a candlestick chart, what you could, and I'm thinking of this like during the 5 p.m. rollover, right? If you go to 5 p.m. tomorrow, this is a 1 minute chart, but I mean, don't be surprised if that rollover period from Thursday to Friday, if we have, excuse me, I'm trying to use a straight line here. If we have, let's say that right now this is 5 p.m. 5 p.m. here, we could have a gap starting right there. And this might be like a 10, 15, 20 pip gap. If you're trying to put a stop loss right here, as Gary said, this is a market order. If the broker can't fill you and get you out with this level, you're going to get stopped out up here instead. So it is, again, if you are burned on this, it can run your stop loss. All the more reason to trade smaller. Be conservative on the trade size. But that's a good point, and it's something we have to watch for. All right. So, I mean, to me, that's about it, Gary. I mean, I'll take the spreadsheet here, or take this PDF if anybody. I mean, you guys don't need to see our ugly faces.
No. Keep ugly faces there.
Anything you want to add to this? So we've got our scenarios, we have our strategies we're talking about, we've got when the polls are open, what windows we're looking to trade. We're talking about this again tomorrow for day 2. We're going to review what's happened from any active zone trading tomorrow, which I'll be up looking to trade the London session. And I've got my trading room tomorrow morning as well. Gary and I will come back and have day 2 at 1 o'clock. Same thing on Thursday, or on Friday. So I saw Matt ask earlier, are we trading this live together? I mean, we're talking about a 48-hour plus window. So no, we're not trading it live together. But we have taken today to prepare you for some short-term opportunities. The London strategy, the London daybreak strategy is pretty straightforward. The micro price detector is very straightforward. Some scalping opportunities. Gary, you can see his approach is more along the lines of his Ichimoku cloud and looking to see what the price action does and confirms. So, I mean, there's a lot of ways we can tackle this to make some pips. It's just a matter of how active you want to be. If you want to be active and really participating quickly, then you're going to start trading tomorrow and Friday,
Chris, what I'd like you to do is also add into this document, add in your YouTube channel, my YouTube channel, social medias. Just because I'm going to be talking about this throughout the next 2 days on YouTube and probably post a couple of things, probably in social media, post something on social media. Actually, if you go ahead and search FX Big Dog, whether it's on Facebook, Twitter, or Instagram, you'll find me. But Chris, go ahead and add that in. And also, what I also want to do is, Chris, I also want to add in over here as well. I want you to add in the because I know that there's some students that don't have access to some of the material that we're using, some of the tools that we're using. I'd like to go ahead and also add in ways that they can actually get connected with the stuff that we're using if they're not a student. And again, traders, you got a couple of choices here. Follow us, just keep coming to the sessions, follow us, see what we're doing, see how we get into these trades, what are we using. You can certainly do that, or if you choose to want to go ahead and add in another tool into your traders box, then you can certainly go ahead and use any of the trading tools that we're using. We'll give you the links of how to be able to get access to that. No obligation to you, but certainly would be a big help there to have that information ready to rock and roll. So yeah, we'll get that link to you as well. We'll add it to this document. I'm not sure if Chris is going to be able to have time today.
Yeah, I'm working on it. I'll get it up there.
Okay.
Yeah.
Well, then while you're doing that, Chris, let me go ahead and take a look at the dollar. We just had some movement out of the dollar, so let me grab the screen right here while you're going ahead and doing that.
Sure, go ahead.
And let me take a look here. I believe that's the screen. Let's see. Yeah. Okay. Good. So we've just had the FOMC break in at the moment right now, and we're actually getting a big bearish move out of the dollar. I didn't think we'll get an earlier move as of today, but it's certainly happening right here. Yeah, you can see the dollar index broken through that channel that we're in. I expect this maybe an upside move first before a downside move, and it looks like it's just selling off right now.
Yeah, baby.
Yeah, exactly, right. And
Yeah.
so if you look over here, here is the daily channel that we spoke about. We said we're going to look for price to move south, and it's moving pretty fast, very quickly, and that's exciting right here. So we're starting to see a breakout. There's that. There's that. I'm getting the FX chief busy texting me right now. Why is the dollar falling?
Yeah, because it should be.
Yeah, exactly. Fed decision. So let me just text the chief. We have Fed decision right here. So we're seeing a bearish move here on the dollar, and if we go to the pairs that we spoke about, now remember we did say that the price is going to move south, and we did point out there was a head and shoulders. Chris pointed out there was a head and shoulders. He was looking at right here. It broke the neckline that he was paying attention. We haven't broken and closed below yet, but it's certainly on its way. Now, if you go to the pairs that we're looking at, for instance, pound US dollar, this one right here could be a fake out, meaning that if the news comes out tomorrow, this could be a rally and then a turnaround to the downside. Now, don't forget that we also pointed out that there was some room to the upside on some of the pairs, right? Some of the pairs still had room to the upside. And if they had room to the upside, we absolutely would see price moving up to those levels. And there we can see price moving up. Now, look, not all the pound pairs are going to move bullish. In fact, the pound New Zealand dollar, anything traded against the New Zealand dollar actually goes in the opposite direction. If you go to the pound New Zealand dollar right here, you'll probably see a bearish move. Let me see if I'm right or wrong. Yeah, it's bearish, not a whole bunch. Let me go to the 1 hour time frame. Maybe you can see a much clearer move on that. Oh, there it is there. So you can see there we had a nice little bearish move right here. And so it's still consolidated a little bit right here. I mean, we're still consolidated. There's nothing breaking out at the moment right now. If you look at the back of the daily, you can see here we're at that resistance. We're looking for price to move down. That's the channel we're looking for right here. Looking for price to move back down here on the pound New Zealand dollar, and that's going to be another 1,400 pips. Now, what Chris is going to be doing is going to be able to give you the details of how to be able to get to the tools that we're using. And an example of that is I'm actually got a couple of my trades already set up on non-pound pair crosses. Yeah, you can see right here. Here is non-pound pair crosses that I've been following in my trading room right here. And so it's non-pound pair crosses that I've got into. But as we go into the pound crosses, I'm very excited about to add that in. And what this is going to do is going to be automatically placing my trades for me once I define the direction. And so all of these things that Chris and I are showing you during these next few days is due to the fact that we're using these type of tools to help define the directional bias manually, but then go ahead and deploy in our systems like you see with the MPD, pockets, end zone trader. All of these systems are built to be able to help us trade better and to be able to trade through the times that we're not going to be available at the computer. So we're going to make all of that available in this document that Chris is going to go ahead and share with you. And Chris is, we'll have that ready in a moment. Now, going back to a couple of these dollar crosses that we've just seen some movement out of. Let's see over here. I'm hearing a little feedback there, Chris. I'm not sure if your mic's still on.
Yeah, it shouldn't be me. But.
Okay. Funny we're hearing some feedback. Yeah. All right, that's weird. It shouldn't be you, right? Huh. All right. So, anyways, we've got the US dollar CAD right here, and US dollar CAD's gone bearish as well. Still in this channel. If you look over here, we've got this upside channel right here. We've got our downside channel. We did say watch out for the break when we were talking in the trading rooms, but but we did anticipate price to go ahead and fall off this backside of the channel. So just like we're seeing here on the US dollar CAD, as price hits resistance, starting to fall down, this is pretty much what the pound US dollar is setting up to do as well over the upcoming 3 days that we go ahead and look at those setups. So very exciting times, very exciting opportunities that are presenting itself. We're just going to be a little more patient. Don't be too anxious, traders. Make sure that you weigh out all your options as to what this is going to offer you, right? And we have to make sure. Okay, so yeah, Chris, now all we're going to do.
I've got the PDF. I've got the PDF ready, Gary.
Okay, good.
Yep.
I'm going to give it. All right, so Chris is going to go ahead and post that PDF. And Chris, yeah, this is just giving them information. We'll talk more about the strategies of what you're using in tomorrow and the day after, just to give them more information. So just so that everyone's on the same page, we're definitely going to go ahead and let you know what we're using. Chris has given sort of an outline already. I've given an outline of what I'm doing and how tools I'm using. But as we go into the tools we're using over the next couple of days, we'll go into more detail of exactly what it is and how it benefits you and how how it's going to be able to be something of use as you move forward with the trading opportunities we talk about.
Yep, and man, I'm really happy that you brought up that dollar again, because I am long Aussie dollar, I'm long Aussie Singapore dollar, I am long Euro dollar, I'm loving this. I'm long New Zealand dollar, so I'm really happy to see the dollar finally cooperating. Nothing like the old Fed to bring it home.
Yeah. All right, I think that pretty much wraps up. So we got the document shared in the handouts. We'll have this a document again tomorrow and hand it in have it in the downloads. Anna says that I cannot download the PDF.
Yep. Here's what I'm going to say. If you can't, I mean, you should be able to go into the GoToWebinar application and download this in the handout section as a PDF. If you can't download this, I'm going to send this right now to every success coach at MTI. And so just reach out to them and they'll send you the webinar. If I think that's probably the easiest way to do it is get hooked up with them. They'll have the PDF ready, and we'll see you back here tomorrow at 1 p.m. I know that a lot of you will be with me tomorrow in my flex room, be with Gary tomorrow in his learning trading room, and then we'll reconvene tomorrow at 1 o'clock, and we'll have some fun talking through what happened overnight and what we're going to do moving forward.
Yep, absolutely. Guys, I appreciate everyone coming in. We had a good time, and definitely looking forward to tomorrow. Tomorrow's going to be the hype day, and then, of course, then on Friday, it's going to be then our plan of action as we go ahead and follow through with the trading plan. So hopefully you guys enjoyed it. We're going to see you guys back tomorrow at 1 o'clock. Thank you very much for your time, guys. Have an awesome time. We'll see you back tomorrow.
Okay, sounds good. Thanks, everybody. Thanks, Gary.
Thanks, Chris.
See ya. Bye.